stock market in this war-driven sell-off has offered no place to hide, except for apparently a few meme stocks. Hertz and Avis Budget rental car company have caught fire, and money is flocking to these stocks, ticker symbol HTZ and ticker symbol CAR. Because I have an analytically minded approach to these markets, I want to take a quick look at the data and the case for buying these stocks. I conclude that I'm going to stay away, far, far away. You know, if I were a day trader, maybe I would have some fun with these, but these are very dangerous stocks to chase right here. Let's take a look at the data. All right, I'm going to take you through the case one by one. Here is the Hertz report. This is from their own website. You can see newsroom up here. Each of these tabs, you'll be able to see the URLs I'm using. So it's from their one of their press releases. March 26th is the date, so that's today. And this is what got everyone really excited today. This is what Hertz is seeing. They reported a 15% jump in search traffic over the last week. And they say that this signals travelers may be considering other ways or backup plans to reach their destination. They said for some sales-related data, they said 1 in 3 customers are currently renting cars specifically for road trips and driving vacations. Now, note they are not providing specific data that says the business has jumped over the last week. Search traffic has. So it's not clear yet whether the interest that people are showing is translating into bottom line or top line results for the company. But nevertheless, this is the result on the stock. Hertz in particular soared 9.2% today. Now, I'm going to show you some quick technicals. If you're not technically minded, don't worry. I'm not going to spend much time on it. But this red line here is 50-day moving average. Based on my technical read, this is not an accident that the stock was faded all the way back to this resistance line. You can see that this red line has guided Hertz down since middle of last year. Hertz is overall in a downtrend. The stock has been doing poorly, and because the rental car business has been doing poorly lately. Now, the irony of if people are jumping into their cars because they're frustrated with long lines at the TSA, the ironic thing is not only are they giving up an airline ticket, but they're going to hop into an expensive car and they're going to rush out onto the road paying extremely high gas prices. This is very odd consumer behavior, and it has to be considered temporary. That's the case number one that I'm making, that this behavior is temporary and not sustainable, even if the TSA problems continue. So anyway, that's Hertz. And you can see this large volume. So this is real interest in the stock, very high trading volume. You see this green bar here. Volume hasn't been this high since, let's just say, earnings last November when Hertz soared 36%. And I find it very notable that that was the last peak for Hertz stock, and it just continued to drift lower. Let's take a look at Avis. Avis Budget Group. Now, they've had a different experience. When they last reported earnings around the time that Hertz did, actually right before, their stock tanked 6%, and it hasn't been the same since. You can see the steady downtrend into the last earnings report, which was just, that was just last month in February, and the stock tanked 21.5%. Now, I put in this note because this is specifically from their earnings conference call. And I quote, FAA flight reductions, air traffic control disruptions, and extended TSA wait times materially reduced discretionary travel as it increased both uncertainty and inconvenience. Commercial rental days went from mildly down in October to down 11% in November. December stabilized, but by then the damage to the quarter was done. Now, this is the last government shutdown. This is, last fall, and they're reporting in February. I can only imagine what the current madness in the airports is doing to at least Avis's business right now. But Avis is riding the coattails, and it looks like traders in Avis, actually ticker symbol CAR, got the word earlier than the Hertz traders did. And you can see here, Avis has been straight up for 4 days. This is technically a parabolic move, well above normal price volatility. Today it soared 12, let's say 13%. And notice another technical feature here. See this blue line? That's the 200-day moving average. So yes, Avis was able to punch right through its 50-day moving average resistance, but it's stalled here at 200-day moving average resistance. From a technical standpoint, at least where things stand today, I would not be buying either stock, Hertz or CAR, just based on the technicals. Particularly Avis, ticker symbol CAR, is well overextended right now. Now, the interesting thing is, as a day trader, these stocks could be interesting because they both have very high short interest. Around 20% of their outstanding shares, of their float is sold short. So I can imagine that what's going on is also at least partially a short squeeze, right? So now both Hertz and Avis become meme stocks because we have a narrative in place, and that narrative alone is enough to motivate people to buy, and then it forces shorts to cover. Now let's examine Hertz's claims, right? Because they said search traffic has jumped 15%. First of all, let's anchor ourselves in the timeline. This is February 14th when the shutdown happened with Department of Homeland Security, DHS. And this is what started TSA down the path of its current chaos. All right. We can go right to Google. You know, the beauty is this data, this search data that Hertz is talking about, is actually freely available to us. Google Trends. So I pull up Google Trends. If you want to repeat this, it's a same analysis, trends.google.com. And there's multiple ways you can identify search terms, but I went ahead and used the company themselves, Avis and Hertz, as the search terms. You can also do it by topic, and you could just do it by word. I checked out all of them, and they were all pretty consistent. So I'm sticking with the company search. The red line is, let's go back up here. Oh, a red line is Hertz, blue line is Avis. Fascinating. Look at these lines. Avis has had almost no jump in search traffic since February 14th. And let me show you the x-axis. So let's nail up. February 14th is right here. If you follow the blue line before February 14th and after, Avis hasn't really seen much movement, right? But if you look at the red line for Hertz, sure enough, search traffic for Hertz has jumped up. Now, I didn't do the exact calculation to see whether the index, the Google search index, is actually up 15%, but it doesn't matter what the exact math is. What matters is that indeed interest in Hertz has gone up. Now, again, this does not say that search interest translated into business results. In fact, what could have happened is other car rental companies got the business and not Hertz or Avis. We don't know that yet. We won't know until maybe even earnings for both of these companies. But anyway, this is great. I just validated that search interest is up. But now notice, yes, it's up from the pre-shutdown timeline, but the search interest has been waning lately. And in fact, if current trends continue, particularly for Avis, we could actually see lower search interest very soon. So again, my argument is that this dynamic, this narrative is not sustainable. And one more quick check. I looked at overall searches for car rentals. So notice I just used the search term. So this would be for people that are generically looking for a search for cars. And guess what? There was actually a bump up starting, let's just call it February 9th, right before the shutdown, and a definitive increase that has been sustained since February 14th. But guess what? Yes, look at this. Again, this tells me right now that the bump in search interest for cars is actually now about to fall off a cliff and at least return to the pre-February 14th levels. I can only speculate why this is happening, and I suspect it's because people are just in general getting disinterested, dissuaded, and unmotivated to travel because of high gas costs and just overall logistical problems. All right, so let's go right back to the charts again. Here's my case from the technicals again. CAR, ticker symbol CAR. This is Avis, well overextended. In fact, technically, this stock sets up to be a short, but 20% short interest is very high. So if you're going to short these stocks, you better be ready to get squeezed right out of that position. But if you have the capital, particularly if Hertz reverses this entire candle, it's definitely subject to a short. Sorry, if CAR reverses this entire candle, which will take a lot of selling work because there's a lot of buying volume here, then it's definitely a short. It's definitely a technical short. I'm not the one to short these. Unless I can find some cheap put options. And then same thing for Hertz. Hertz actually doesn't have much room to go because it only got, only in double quotes, it only got up 9% today, and a full reversal of that candle basically takes it right back to the recent trading range. So there's not much juice to squeeze on that one. All right. If you have any questions, put them down below. Share or like this content. It really helps with the algorithm. Thanks a lot for checking this out. Subscribe to the channel if you want more of this kind of content. Thanks again, and take care.